I traded live for 10 months and tracked every single trade, every single data point, and in this video I'm going to be breaking that all down. My strategy performance, where there's maybe some leaks, what's really dragging my performance down. We're going to cover what's been working well for me, what hasn't been working well for me, and really just a general overview of strategy performance, my level of execution, and how I can improve and how I can get better. So this is going to be a raw, transparent video, no crazy editing, no fancy B-roll, just raw, honest data and complete transparency. All right, so let's just dive straight into the data. So this is my PDX model across 67 trades from the 12th of June 2025 to current present day, which is 28th of April, at least when I did this, 2026. Trading both on Euro USD and USD CAD. Now, current total return is about 24.8%, with my expectancy at around 0.15R per trade. Win rate is around 34%. And obviously we'll talk about this later, but this is really the main drag in my current performance. Profit factor of about 1.28. Max drawdown of negative 7.27R, and I'm currently in drawdown around 5.7R. I plugged all this data into Claude, and really it's just broken down every single data point, every single criteria that I'm looking at, and kind of given me a bit of guidance and a bit of clarity as to where the leaks might be happening. So the headline finding clearly is that CT setups have produced 0 winners on 12 attempts. Now, CT is essentially counter trend trades. Clearly, this is a huge leak. And, you know, we'll talk about this later on as well, but this is actually shown in my backtest as well. So this is potentially something that I'm going to look to adjust in some way or another. I don't want to completely rid of these CT trades, but filtering potentially these setups and being a little bit more careful with my positioning during these times. And as you can see, the main drag at negative 9.3R from this setup. So again, a very interesting data point here. And so I raised the question to Claude is, could I maybe target smaller profit targets with counter trend moves and larger profit targets for pro trend moves? This is what I spat out. I said, half right. The instinct that counter trend moves don't run as far is clearly correct, and the data backs it, and not just the live data, but the backtested data as well. The mean maximum favorable excursion was about 0.6 RR. So smaller CT targets, even that doesn't even fix the CT. Every profit target level still leaves the expectancy negative. So tighter targets, whilst it does reduce the bleed, it doesn't make that bucket of trades positive. It says to skip CT entirely. We'll see whether that's the right thing to do. Now, for pro trend, which is PT, the second half of your instinct is more useful. PT is fat-tailed. Most fail outright, but when the runners run, runners run. Okay, there we go. Pushing pro trend targets out to 3R roughly doubles pro trend bucket expectancy versus the current 2R. Again, something that I have been noticing lately is these pro trend moves where, you know, I am quote unquote on the right side of the market. It doesn't necessarily make sense for me to cap these trades. And it makes sense maybe to be a little more aggressive with my profit targets and to potentially increase my profit on these. So extending its target from 2 to 2.5 or 3R adds another 5 to 10R across the data set, which again is a very interesting statistic. Prop firm match is the #1 place I go to for anything prop firm related, whether that's reviews, offers, spreads, payout, you name it. They cover everything about these firms, and we know how important it is when it comes to choosing the right firm. So check out the link in my bio for more information. Here we can see a breakdown of the 3 buckets that I trade, obviously counter trend, pro trend, and where the trend is not really clear to me. Now, I use a fairly mechanical way of identifying these scenarios. Inevitably, there is going to be some discretion in this identification. So I don't want to hold too much judgment to these, but I'm fairly confident with these findings. So pro trend, we have a win rate of about 33%, expectancy at 0.12R with a total contribution of 1.5R. So again, not too good results, but we're only at 12 trades. So we have to remember sample sizing here and how important that is when making decisions that implicate changing your strategy. Maximum favorable excursions is around 12R. So again, that's a clear indication that when we're pro trend and when the trend does move, it really moves, right? And now we also have percentage of trades reaching above 2R is about 33%. So modest edge, but fat-tailed. 50% of trades show less than 1R MFE, but only 33% reach 2R targets, currently leaving meat on the bone. Counter trend trades, again, only 12 positions in this, so bear that in mind. 0% win rate. I've not won a single counter trend move. And obviously, given this current market that we're in, it's very volatile, right? And it's very one-sided. And when the market gets a narrative and a sentiment, it runs away with it. And so because my strategy is very much a mean reversion style, it doesn't necessarily perform very well in these conditions, which is clearly obvious with our current findings. Yeah, not really too much data to go off there. It's negative basically across the board, and the contribution has negative 0.3R implications. So yeah, just very poor sample overall. Now, the not clear bucket, which accounts for about 43% of the positions, is obviously setups where the structural context was ambiguous. So basically a range bound market, which again makes sense that my performance is coming from these types of trades. The win rate was around 44%, with expectancy at about 0.42R, and that total contribution of 18R. Mean MFA at 2.3R with a max MFE at 7.7R. So pretty solid returns in that bucket, in that basket of trade, which I would expect, right? I would expect these types of trades to perform better than the others. What would happen if we use different take profits, and how would that affect the overall expectancy per trade? And you can see that on these not clear and pro trend trades, if we target slightly higher profit target, our average expectancy per trade is naturally going to increase. Now, again, like we spoke about before, with counter trend trades, no change in profit level is really going to increase the expectancy because they're all losses. So that's fine. No real issues there. You can see the equity curve and the drawdown as well. Nice and steady equity curve. Nothing too crazy, nothing too drastic. No big moves on either side, which is fine. And again, we can see the drawdown, which again, nothing too crazy, no huge spikes in drawdown. So I'm pretty okay with that. My risk management is fairly solid, and yeah, my execution there as well. Okay, so here we have the maximum favorable excursion distribution by bucket, and you can see, with these clear, not clear trades, sorry, should I say, we have a large cluster that, whilst we cap at about 2.2R, they do run. A large cluster of them do run, well above 3R and around this 2.5 to 3R range. So potentially looking at targeting, slightly higher R is again something that I do want to explore, and I think that could be a valuable addition to my strategy. Now, looking at the multi-dimensional breakdown, looking at pairs, again, dollar CAD is significantly underperforming across this data set. There's no doubt about that. There's going to be a few factors for that, and obviously geopolitical is going to have a huge impact as well, because we know how impactful the dollar and CAD is as well. Obviously, with the Iran conflict, we've seen oil prices going absolutely berserk, and inevitably CAD is going to have these strong moves as well. So that's likely why this underperformance is happening. Again, I'm only 37 trades, so I can't really draw too much of a conclusion from this. However, if I do look at my backtest, that does maybe paint a different picture. Maybe we can make decisions based on that. By the day of the week, again, not really a huge enough sample for me to make decisions. Long and short, again, not really a big enough sample here to make decisions based from. And we can look at the pair versus the bucket matrix. So this is each individual pair with the not clear, pro trend or counter trend moves. And clearly Euro USD not clear is outperforming drastically everything else. well, not clear in general is drastically outperforming everything else. And we can see that counter trend on both EU and dollar CAD is underperforming. Again, fairly small sample size, so I'm not going to make any rash decisions just yet. I do need to look at a broader view, a broader picture of what this kind of shows. And you can see my monthly performance, and lately it's been rough. You know, I'm not going to hide anything here. I've not had month after month of profit. And, you know, definitely my execution has suffered in this period. I have definitely struggled with executing certain trades, pulling the trigger. So, you know, that's inevitably why this kind of slow period is happening for me. Again, it's nothing that I can't improve on. You know, I'm not sitting here and saying that I'm perfect and that I've figured everything out and that I've made it. It's that I'm deeply committed to this journey, right? And so I'm okay with exposing myself like this, because that's how you get better. It's how you improve. It's to look at your performance with honesty, with transparency, and, you know, non-judgment. Like, I'm just here to improve and get better. So how can we actually do that? Now, when we look at the action items that Claude has given me, it says stop taking CT setups. So the structural ceiling on CT extensions means even tight targets cannot make this profitable on the data. So this is something that I am going to be tracking diligently. It's something I am going to be looking at, because clearly there is significant underperformance here, not just in this live data, but in my backtest, where if I look at Euro USD, you can see that CT trades here have around a 34% win rate across my backtest. And if I look at dollar CAD, CT trades have a 30% win rate across my backtest. So this is clearly significant drag in my performance, and something that, again, I am going to have to be very careful about taking these positions and allocating risk to them. So that's definitely something that I'm going to be looking at. The next is to extend not clear targets 2.5 to 3R. Now, again, when price action is clear, when the higher time frame structure is clear, I think extending targets makes the most sense, right? Because why am I capping myself when there's room to go and there's momentum on my side? So again, this is something that I'm going to be taking a closer look at. Push pro trend targets out to 3R. Again, like we've just spoke about. Avoid Tuesday and apply Tuesday filter. Again, not really a huge enough sample for me to make that decision, so I'm not too concerned about that. Investigate USD CAD underperformance. Again, something I'm going to be looking at as well, and potentially tightening up those filters for the setups. Based on my backtested data, my longest losing streak was about 9 trades. So again, nothing too crazy in terms of drawdown, but like Claude says, these 4 consecutive negative months does warrant me looking into this and, you know, being a little bit more smart with my level of execution. So now that we have this, what I wanted to do was look at my backtest, look at the overall drawdowns, the, you know, length of drawdowns, and the win rate stability and rolling win rate of this system. So this is based on my data, my backtested data. You can see the max losing streak here is 10 losses in a row. The longest drawdown of about 118 trades of 209 calendar days. So a fairly significant amount of time. So I don't feel too uncomfortable with the drawdown that I'm in. I know any strategy, any consistently profitable model is going to have slow periods, especially if you're trading a singular model, which I currently am. And so that's fine. I don't really have too many concerns about that. The win rate is lower than my backtest, but not too crazy. And again, I think I can improve this win rate by applying some more filters and maybe being a little bit more selective with my positioning. And the second thing that I wanted to look at is the rolling win rate stability, because whilst you can have a 60% win rate, that win rate is inevitably going to oscillate after each individual trade. So you're not just going to have a 60% win rate week after week after week. Some weeks you'll have a 20% win rate, other weeks you'll have 80%, other weeks you'll have 30%. So it's going to oscillate. And when I look at this backtest, I can see that there are periods where my win rate drops to 15% across a 20 trade window. And when I look at 50 trade window, again, a similar thing happens at around 26% win rate and around 28% win rate here as well. So there are periods where your win rate is going to drop, where your performance is going to be negatively affected, whether that's an edge decay or whether that's, poor execution on your front. But expectancy is fairly similar. Profit factor is fairly similar. Again, the rolling expectancy per trade, the R per trade, is going to change as well. So with 60 trades, I can't really draw too much of a conclusion based on the strategy, and I can't really make too many rash decisions about changing or switching things up. So with that being said, I think the key takeaways are pretty solid, and it gives me a really good grasp on what I need to work on. And obviously, if you haven't done this with your data, I'd highly recommend it. Put it in, just be honest with yourself, because at the end of the day, we're here to improve. We're here to get better as traders. And if you're not fully analyzing and auditing your data, how can you possibly improve? So use Claude, use the tools that you have at your disposal and get better. So that was the video. That was the data. That was the raw, honest breakdown of my strategy and my approach. I realized it was a bit of a longer video than usual, but I hope you enjoyed it. Again, just trying to show the raw, honest data of my strategy and, how I'm navigating the market during these times. So if you want to see more of this, make sure to hit that subscribe button, like the video and comment down below, and I'll see you in the next one.